if I make 400,000 a year and I spend 200,000 of it, or I spend 300,000 of it, like I'm still probably worrying about money. Funny how that happens when you're a salesperson, like you can be a check to check millionaire, right?
All right. Welcome back to the How to Sell Insurance podcast. I'm Grant Lieber, joined by my two good friends, Mr. Ashton Langalunde and Ryan Federico. We have got an interesting one today that I think is a topic that isn't discussed enough for newer business owners, and that is how to manage money and personal finance. One of those things that took me several years to really fully understand is something that we wanted to provide some content to you as a couple of baby steps. We just wanted to give you a couple little tips and tricks as you're getting started on your journey. And maybe you've been on this journey for a while, but you haven't really done some things financially that maybe you should have. And so we want to give you a couple things that you can do to be able to be a little bit of a smarter business owner. I wanted to just start with kind of talking about the one book that has been incredibly influential for me, and that is called Profit First. It is a book that I read probably 5 to 7 years ago for the first time. I revisit it all the time, and it's something that I actually have found an accountant that is familiar with, which is important. And the general concept with this book is that when you are making income, especially as a business owner, you need to have multiple different funds or multiple different accounts that you're ultimately utilizing so that you can manage your money effectively. And I think one of the main things that really this book had taught me is that, number one, you've got to pay yourself first. You got to take your profit first. And then you have to have other accounts set up so that you can have an operating expense account, a tax account, a tithing account for things like charity, having your personal kind of owner's pay account that you can use for your own expenses, and then having some savings as well. So that's kind of the main concept of it. Basically, you want to look at your income and not look at it as the dollar that comes in is my dollar. You have to really think of this like you're being a business owner. So Ryan, I wanted to start with you when it comes to this topic, because you're someone who's been in business for many, many years, and you've made a lot of incredibly wise financial decisions. And so I guess I would just ask you, like, if you're someone who maybe was an hourly or salary employee and you're getting into being self-employed for the first time, what are some of the early things that you would advise people to do or think about?
Man, it's such a great topic, and I'm glad we're covering this because I don't think many companies do in our space. I don't think many companies prepare people to be business owners because, quite honestly, like when we're bringing people onto our team, we have no idea if they're going to make it or not. So we have no idea if they're going to do the things to actually necessitate having this information. It isn't for everybody, but if you're listening to this podcast, most likely you've decided that this is for you, right? Like you've decided you want to be independent, you want to be a business owner. You want to have the control and the freedom and the flexibility. Well, that also comes along with responsibility. I think that the first lesson that I had to learn was remembering that it's a business. Imagine if I did have a brick and mortar office or something like that, and I had a lease and I had electricity and I had internet and I had employees and desks and phone systems and all the money that comes into my business. The first thing that it does is pay the overhead of that business to keep me in business, right? And then if there's money left over at the end, hopefully, I pay myself. There are expenses that you need to consider that you are going to need to pay to keep yourself in business before you take the money that you need to take a vacation or the money that you need to, pay your cell phone bill, or whatever it is. So when you're first getting started off, those first couple of policies that you're writing, it's so easy to be like, I'm going to go out to dinner and I'm going to go get a massage and I'm going to go, I'm going to pay and forget that like you have business expenses that you need that money for. That's your business's money. It's not your money yet. And you need to buy leads or you need to buy whatever you need to keep your business going. And so one of the things that I learned early on was separate bank accounts. Even if you're just getting insurance commissions as an individual, that goes into a different bank account, just a separate place that the money goes into, and then pay yourself out of that money, but have all your business expenses come out of that money. And I think that provides clarity and separation between the two so that it's not so messy. You're not tempted to spend your business money on personal stuff. You had mentioned Profit First, great book. I'll give one more resource that really helped me. and we'll put both of these in the description. But I'm hesitant to talk about this because in general, I don't agree with a lot of Dave Ramsey's principles, right? And I'm not, no offense against any of you if you do. In general, I just disagree with a lot of his principles, and I think there's conflicts of interest. But Dave Ramsey has this tool called the irregular income calculator or irregular income planner or something like that. We'll put it in the description, but it's how you budget when your income is irregular, when you're not getting a consistent check every single week or every 2 weeks, when you might be up and down. And you might have a month where you're making 20,000 and a month when you make 5,000. That's sales. That's owning a business. That's, when there's unexpected expenses or chargebacks, or you want to go to a conference and you have a hotel room and you have a rental car and you have, like dinners out and things like that. Having an irregular income budget and a regular income plan, I think that's what it's called, a regular income planner, has helped me out a lot because I can now compensate for when I have big months. I'm not like out spending like a madman when I have big months and the bank account is full, because I know that there's going to be some months when it's slimmer and that we go up and down a little bit. So that's really helped me. And if I had to choose one thing, one tip, it's just think about yourself like a business, and you need to stay in business, right? So separate your business and personal finances, have 2 separate bank accounts. That's the first place to start, I think.
Yeah. And Ashton, I want to get your opinion, but I think one thing that maybe newer people are thinking, and I know that I was thinking this when I first read Profit First, is I thought, well, I'm not making enough money to do this yet. I have debt, I have bills, I have this, I have that. Maybe I'll think about doing these different accounts. Maybe I'll think about paying myself. Maybe I'll wait until I have a bunch of money in the bank to do that. And that is totally wrong. You need to build this habit from the beginning. And so they talk about in the book, the very first thing you do is you set up a profit account, a side account, and all you do is just take 1% of your income and put in there. I don't care how much or how little you make. You can put 1% into a side account and it's not going to affect your ability to pay bills or anything else. And so they talked about, even if you're buried in debt, even if you're not making much money, you're starting from zero. That's just a little baby step you can take. So I think that the message there is just getting started regardless of where you are. But Ashton, tell me what's been your journey?
The number one thing I learned from the beginning, outside of making sure to have the 2 separate bank accounts. Sometimes people think it has to be a business account. We're not telling you need to go have a business account. You need another checking account. It can be anything. It could be another personal checking account. Still to this day, I only have personal checking account. I don't have business checking accounts because the bank where I've banked my entire life said, hey, because you sell certain type of financial products, we don't allow those to have a business account here. So I never got one. I just had another personal checking account. And if you're like most people with most banks, you can go on your app, you can go on your website, you can click open account and you're done in 3 seconds. And then you can walk in or they'll mail you the extra debit card. But it's very, very simple to go, all right, hey, here's a second account. And in that account, that's where all the deposits go. And anything that is a business purchase needs to be paid with that account. I'm not saying you can't use your credit card, but when you pay that credit card for those business transactions, use that checking account. Anytime you pay for anything, it has to come eventually from a checking account, whether it's a credit card, no matter what you do, eventually you got to pay for it with real money, not just a plastic card that you keep swiping everywhere. So use that checking account like that. That was definitely number one in the beginning, because come tax time, life becomes much easier if you go, everything here is business. Done. Your bookkeeper will like you. Your CPA will like you. Everything will be great. The second piece that I learned, and it was from someone who has a $50+ million a year agency. We've had him on the podcast a few times, Edward Pritchett. It was split your income in thirds. Every time you get a paycheck, a third of your money needs to go to the business account. Doesn't matter how much or how little. If you make a $1,000 sale, $333 needs to go right to your business account in there. The other third, put aside for taxes, put aside for chargebacks, etc. But that other third is going into your tax account. Now, should you be at a 33% income tax? Hopefully not. Or I guess maybe hopefully, because that means you're making a crap ton of money. But you're probably not at a 33% income tax level. So when tax time comes, you're not going, oh man, I put away all this money. Oh, I got to spend it all. No, it's, you have your own tax return now. Hey, at the end of the year, guess what? You gave yourself back $3,000, $4,000, $5,000. That was just sitting in that account. Or in a worst case scenario, you get in a pinch, you get low on income, months aren't going well, etc. You can borrow from that Uncle Sam account for a few weeks and then replenish it because it's there. It's that emergency account. And then the other third, that's your personal income. So if you make $1,000 this week, you only made $333. Do whatever you want with that $333. Pay your bills, pay your groceries, But then you need to go, if I'm living on a third of my income, and you can hear many talks from a lot of different people. I saw a video with Kevin Hart was talking to someone and they said, tell us about your finances. Like, what does that look like? And he said, the number one thing I ever learned that someone taught me about managing money is to live on 25% of your income, because that's how rich people get rich, because they're not spending all their money. They're keeping all of that put away to go invest in real estate, to go invest in XYZ, to go keep in the savings account, to grow all, like, it's actually being saved. He's like, if I could live on 25% of my income, then I'm golden. And it's the same thing here. And we're even bumping it up to 33%. So if you can live within your means on that small percent, it's going to be so huge. You're like, well, that's not enough money. Well, get a second job or work in this more. That's the answer.
Yeah. I want to just make a point on that, because most bank accounts, especially like personal bank accounts, you can have them do this automatically. You can have a savings account and a checking account and just say any deposit that comes in, take 30% and put it in savings and put the rest in checking. And it automatically does it for you. You don't even need to think about it. Right? And then you can, at the end of the month, make your 30% payment to yourself, or twice a month, make a 30% payment to your individual account or something like that. But it doesn't have to be manual. You can do this all automated, and it's really simple. My first bank account was an online bank account. It was Capital One. And I know they recently had some stuff where people couldn't get to their money. I don't use them anymore, but it was easy for me to set it up when I first started. I never had a problem with it when I was using it. It's like you can start an online bank account and tell all the insurance carriers to deposit your money into that bank account as long as it's in your name. So do it automated.
And I think we kind of got the banking piece down. And, you talked a little bit about the mindset of this, Ashton, about kind of really living beneath your means. And I think this is one of probably the biggest pitfalls for salespeople in general that start making good money. I know this is a big pitfall that I fell into. Is what did I do, 6 months into my business when I started to consistently write policies? I bought a Corvette. Went out to dinner all the time. I spent all my money on just kind of silly things. And the mentality that I had, and this is one that we see very frequently in across a lot of different, top producers and a lot of different sales industries, is that people almost keep themselves broke to inspire themselves to continue to go out and sell more. And so it's like, you got to figure out a way that you consistently go out and generate income regardless of if your bank account says that you have to or not. And so a big part of really what I had to learn is, like, I need to keep in mind that even though I can justify making some purchase that I probably shouldn't make by just saying, I'll just go run more appointments, I'll just go write one more policy this week. It's a very tricky kind of double-edged sword, because we're in an industry where we have that ability to go out and make more money. I can just go ahead and sell one or two extra policies this week and make an extra couple $1,000s. Most people that have their traditional hourly salary jobs, yeah, they can work overtime, but they can't just rapidly increase their income in a certain time period. And so I think it's really important to keep in mind that you want to let the money that's coming in, you want to keep that money, and you need to live in a certain way for a period of time so that you can live in an incredible way for a very long period of time. And so that's just really the kind of season that I'm personally in. I'm making a really good income, and I'm living off of a very small portion of that, because I want to put myself in a position where in the future I can live in a way that no one else can.
Yeah, this is such an amazing topic for us to talk about. And I get asked all the time, especially by personal producers. They're like, well, why is personal development important for me? Like, I'm not building a team, I'm not leading anybody. Why is personal development important? And it's easy for us to say, well, you should develop yourself so that you can sell more people, so that you can connect with a wider audience. But this is why, because the only reason why I think a lot of people get caught up in this is ego. They want to prove to the world that they're successful, right? They want to prove to the world that they're worthy, or that they're, that they've made it, or that all those people that told them they were stupid for leaving that job and starting this business are all wrong. And if we can get past the ego, we start realizing how dumb it is. And this is what, like, I had to do. The pendulum has swung for me so far in the other direction now that I hate to spend money. I'm in this place where it's like, when I first, started making a strong income, it was exactly like you talked about, Grant. It was like, I'm just going to blow money everywhere, and I'm just going to go shop at the organic grocery store for everything. And I'm going to get the luxury car, and I'm going to, then whatever. I was very loose with money. And I remember there was this point in time when I realized that financial freedom is not making $400,000 a year or $500,000 a year. Financial freedom is never having to worry about money and income again. That's what financial freedom is. If I make 400,000 a year and I spend 200,000 of it, I spend 300,000 of it, like I'm still probably worrying about money. God forbid if I make $400,000 a year and I spend 450,000, right? Like, it's funny how that happens when you're a salesperson. Like, you can be a check to check millionaire, right? So I was going to get this luxury car. It was an S-Class Mercedes, right? And I had convinced myself that the S-Class Mercedes would make me seem successful. Like I needed to look the part for people that were going to come onto my team. If I was still driving my Chevy Equinox that was fully paid off, it's an awesome car and reliable and had 40,000 miles on it. It's pretty sweet. You know what I mean? But if I was driving this Chevy Equinox, they would think that my company was a sham because I wasn't driving a Mercedes. So I'm like, I've convinced myself this nonsense. I'm going into the Mercedes dealer and I'm looking at this car. It's like $119,000. And I start looking at this payment and like this interest rate and whatever. And it's like, all right, so I'm going to spend about almost $1,100 a month on the payment of this car, the interest alone. I was going to spend about $160,000 on this car overall when you factor in interest and everything like that I was going to pay. But what got me, Grant, was this. It was like, if I bought $1,100 or $1,200 of leads and worked them in my business, what's my ROI on those leads? It's like 4,000, like 3,000 maybe on a bad week. So let's say it's 3,000 ROI on the $1,000 of leads, which is, I think, fairly typical for one of our producers. Multiply that across 52 weeks. Think about how much money I'm losing on a car payment when I could be taking that money and putting it into leads and growing my business. So now it doesn't cost me $160,000 for the car over 5 years of making these payments on this car, right? Or 6 years or whatever you finance this car for. That's like a $500,000 car, $600,000 car. Like, do I really need a car that bad? Is it really going to serve my ego that not only am I going to be losing that money month to month in my business, I'm going to be losing the profit on that, and all just what, to serve my ego, to make myself look better, to make myself look more successful? I convinced myself of the dumbest stuff like it was a smart financial decision. And, instead, what can I use that money to ROI on? What can I invest that money in that's going to give me a return and get myself to a place where I never need to worry about income again? And you can build that in our industry. You just have to be really smart with your money and not waste it on these things that don't make any sense.
And you know what's really funny is like the people perceiving you because you do or don't drive a certain thing. It totally is a double-edged sword. I mean, I can tell you that the vast majority of people that I know that drive very expensive luxury cars are not in a position where they can actually afford them. And they kind of talk about how the average millionaire drives like a 7-year-old car. In fact, for quite a few years, so after my Corvette days, and then I bought a BMW, and I finally got smart and I bought a Honda Accord. And it was a phenomenal car. And I didn't have a car payment. And it worked great. But I got to the point where I was like, I'm tired of driving around a Honda Accord. And I bought a brand new Mustang. And guess what happened like the very next day? One of my friends was like, I kind of like thought you were a little more humble when you had the Honda. He's like, I kind of admired the fact that you made a lot of money, but you still drove this 10-year-old Honda Accord. And I was like, oh man, that's a perspective I never thought I'd hear. So it does go both ways on that. So Ashton, kind of maybe some final thoughts on this. I know lately you've really scaled up your income with where your agency is growing. How have you kind of stayed in sort of that millionaire next door mindset?
One of the biggest things as well is setting whatever those goals are and keeping those in mind. Yeah. Again, when speaking with Edward, I mean, someone who can truly afford probably just about anything. Even him, his luxury vehicle is a Toyota Sienna.
Sienna, the minivan. I remember calling him one time and I was like, hey man, you driving the Lambo around? And he's like, dude, I'm in a 7-passenger minivan right now with Cheerios in the floor, or something.
Yeah. And, he truly in cash buy just about any car. Yet he's like, well, do I want something like that? Sure. However, he's like, I have net worth goals where I want to be at a certain place before I start spending money on things like that, especially when they don't draw that type of return. It is nothing but a depreciating asset versus I could use that money now to go build a much larger wealth. So that's always been one of the biggest things that I always try to keep in mind. Another thing when it comes to money management is get a minimum of at least 3 months of expenses set aside. Put it in a separate bank account. Put it in your spouse's bank account. You can't touch it. Get 3 months minimum set aside. Then the next goal is to get 6 months. So that way, worst comes to worst, you have that money there that can pay the bills to do what you need every single month. Those are the biggest things, is keeping those at the forefront of everything, even when you do have a lot more money. These are the goals. Hey, this is what we need to have before we start spending money. And then, hey, whatever you have in that leftover, do whatever you want with it. Maybe you want to give yourself your own payroll of fun money to go, hey, I have X amount a week, a month. I can do whatever I want with this $2,000. If I want to take that 2,000 and save it for next month and make it 4, great. If I want to take this, $300 and save it to the next week and make it 6, great. Put yourself within those limits for yourself, so that way your business can grow and you don't have to worry about it down the road.
Yeah, well said. And I think that in itself is a really good barometer for, can I afford to do something? Well, do I have 3 to 6 months of savings put away if something were to happen? Am I in a position where I have paid off my debts? If you haven't done those things, you shouldn't be in a position where you're making any luxury purchases. You shouldn't be going out and spending $200 or $300 or $400 on a nice steak dinner. So, once you kind of get those things set aside, then you know that you're going to be in a place to afford to have fun. And we're not telling anybody. That's one of those things, Dave Ramsey talks about that I don't agree with principle wise, is he kind of believes on this whole eat beans and rice. The only time you should only ever see the inside of a restaurant is if you're working there. And, I don't believe in that stuff. We're not trying to tell people not to have fun. We're telling you to enjoy, the fruits of your labor, but we're just telling you to enjoy it in an intelligent way so that you can really multiply the effort you've put in. That being said, Ryan, any final thoughts?
Yeah, man, I think that's a great point. If a Rolex is going to do it for you, you know what I mean? Like if you have always wanted a luxury timepiece or something like that, and it's like it's going to be a mental achievement for you, for yourself, that like you've accomplished something and you appreciate, awesome. Work to get a Rolex. If you want a Ferrari, I remember Tim Penso talking about like wanting a Ferrari and being a car guy his whole life and dreaming about having a Ferrari and wanting to get to the place where he could get a Ferrari. And he put himself in a financial position where he could get a Ferrari justifiably, but he wasn't getting a Ferrari to prove to the world that he was successful when he couldn't afford it, when he didn't really have the money. And guess what? He ROI'd on the Ferrari. He flipped that thing and sold it for a profit. I know it's probably not exactly what happened, but when I'm thinking about expenses in my life or things that I want to do, trips that I'm going to take or whatnot, I'm always thinking about how can I use this in multiple ways, right? I'm a business owner. If I'm taking a vacation with my family, how can I maybe go to someplace cool where I can do a little lifestyle posting and I can be attractive to new people coming onto my team? I can do something that ROIs me off of the money that I'm spending, whatever I'm spending it on my personal side, right? Is there a way that I can make return from this? And there's some things that, of course, you're not going to. But I think that if there's one tip that I would sort of leave everybody with, it's, if nobody's ever told you this, being a business owner in the United States of America is one of the greatest tax cheat codes ever developed, ever created, like in the history of the world. The stuff that you can do as a business owner is unbelievable. I'm not a tax person. Don't take any tax advice from me, but there's a lot of really smart, capable, amazing CPAs out there that can walk you through some of the different advantages that you can have as a business owner that you don't have as even an independent, 1099 sole proprietor. And so at some point in time, you may want to switch over to becoming a corporation. You're definitely going to need to consult with somebody about what time that is for you, because there's payroll taxes that you need to maintain and accounting fees that you need to have. And there's expenses to operating as a corporation that you just might not be ready for and you might not be able to justify with your level of income. But if you have the level of income and you can get to that place, there's some really amazing stuff that you can do within the legal precedent and the tax code of our country that makes it really, really cool to be a business owner. And, I can tell you that my income is a lot more than, the average person in our country. And I probably pay less taxes legally than a lot of them do because I'm set up as a business and I have business expenses and I've exercised the tax code to its legal limits with the CPA that I work with. So I just highly suggest, seeking out some wisdom in that area and talking with some people in your life who may be there and starting to angle to set yourself up in that way.
Yeah, I think that we absolutely should have a CPA on. Maybe that's something we'll do. We'll interview them and we'll talk about what those types of tax advantages can look like, and when it is right time to maybe get yourself incorporated, and what that can look like. Because you're absolutely right. There are people that have made a fraction of what we make, and we are paying a lot less taxes because we are taking advantage of legal opportunities to do that. It's tax planning effectively. So that being said,
Yeah.
we really hope this added a lot of value, and just thinking a little bit more, about your money, keeping it in your pocket, doing intelligent things with it so that we can get ourselves into that investor quadrant that they talk about in the Rich Dad Poor Dad. But that being said, we're going to sign off. We want to really hear from you. If there's something that you took away from this that you're going to implement in your life and do your business, we'd love for you to drop a comment. Of course, be able to click on the little notification bell so that you can know when there's new episodes getting dropped. And we'll see you next time, everyone. Take care.